can subscribe to our newsletter so you can keep up to date with all our original interviews and some of the best financial videos and articles from the web. And as usual, it's totally free of charge. So what are you waiting for? Click here and sign up today. Hey everyone, this is Elijah Johnson with FinanceAndLiberty.com, and with us today is Bo Polny from Gold2020Forecast.com. Bo, thank you so much for joining us today.
Elijah, thanks for contacting me, and I really look forward to speaking with you today. Thank you.
All right, well, I wanted to discuss the content in one of your most recent videos. You think that the stock market has basically hit its high and is going to fall before this Friday, the inauguration of Trump, and also before this Friday, gold will break $1,200. Can you expand on this?
Sure, no problem. What I've been looking at is the overall market trend. The stock market's been kind of challenging for the past while, until just recently, for the past few months, I've really come down to analyze, where it's been coming and where it's been headed. And what we came to realize was there's from the pattern perspective and the wave calculations, we basically did a video in December saying that the market is not going to make it past Friday the 13th. And in that video in December, we also said that gold's supposed to bottom exactly at $1,124 on the 15th, the day after the Fed. But with relation to the stock market, after the 13th, the stock market runs out of time. And we also did a video saying that 20,000 supposed to be the final top on the Dow. And on January 6th, it never hit 20,000. And again, that was a ballpark, but it's pretty interesting that it went to 19,999.63. And if you round that up just to the nearest whole number, you're at 20,000 points on the Dow. So I believe that as of January 6th, the Dow topped, and the NASDAQ on Friday the 13th went up to a high of 1584, but then it closed, I think, at 1583 range. But the stock markets, the U.S. markets, should be finished as of the 13th of January, the Friday the 13th. And I believe, and even I think we posted an article like in December saying that don't be surprised if you see a stock crash before the inauguration. So I still believe that the markets, based on our cycle work, is supposed to fall this week right before the inauguration. Now, it's not going to be a crash, which is going to be something silly where it drops 20% or something, but we still are expecting a drop in the markets. And this is basically like the start, the trigger that then puts into motion two more crashes in the first quarter of 2017. And then so gold and silver, we expect to be reacting violently to the upside in reaction. So between now and the first quarter, just to kind of give some ballpark numbers, I was looking at the numbers over the weekend for gold. And if you look at gold priced, say, in euros, because we believe that the euro is going to be rallying, the dollar is going to be falling in the first quarter. But I'm looking at the euro getting up in gold priced in euro terms back up to 13 to 1400. The exciting stuff is stuff like gold priced in Canadian dollars and on the Australian dollar. Don't be surprised if in the first quarter, we see gold back over $1,800 to up close to probably $1,900, but in that range. And in the U.S. dollar terms, I'm still looking for gold between 14 to 1,500, and these are minimum. These possibly could be minimums, so it could go higher. But I think we're looking at about a $200 to $300 move in gold in the first quarter of 2017, and that just starts the ball rolling for the rest of the year.
Now, an interesting thing that you've noted is this is going to be actually kind of the opposite of what happened in 2008. In 2008, we saw the stock market crash and gold crash with it. But this time you're saying that really they're going to be going in opposite directions. The stock market is going to crash while gold rises. Is that true?
Exactly. See, when you look back at the year 2008, the stock crash there. So what happened in 2008, there was two specific asset classes that went down. One was the U.S. or the world markets, but the U.S. markets, and also gold. But what went up during the crash? It was the U.S. dollar. Okay, so this time do not expect that equation. This time expect something different. Of the three that I just mentioned, expect the stock market to fall, expect the dollar to fall. And so because both of those go down, what you get is a reaction for gold to go vertical, to go up. So this crash will not be like the crash of 2008. And also from a bigger picture perspective, remember for the past 3 years, the stock market's gone up and gold's gone down. So they are opposite trades. So don't expect a stock crash to take down gold this year.
Now, what about the silver market? Can you expand on that? Because I know you've recently said that silver could actually break $100 in 2017.
That is possible. See, the issue is with prices. With cycles, they give day counts, week counts, and month counts, and that goes left to right on a page. The price is the vertical move. So what we're looking at right now is, a minimum move this quarter for silver back up to at least 26. Now, if it takes out 26 sooner rather than later, then the next target is going to be up to new all-time highs. So we'll have to see how quickly it gets to $26. But the trigger for silver, and if you'll notice, gold's been moving this in January and February, January, this first couple of weeks of January. Silver's been moving much less upwards than gold has. And the reason is because there's a massive wedge that's been created since the year 2011. So the triggering price for gold is $1,300. Versus the triggering price for silver is only $18. So silver is only about $1 and change away from potential massive large moves to the upside, versus gold has to still get up to $1,300. But when those two price targets are broken, it could be very violent upwards. And we do see, and so all I can look at right now is how high it will get in the first quarter of 2017. And then following that, there will be several more legs to the upside for the precious metals, including obviously silver. And silver will be then outperforming gold to the top side. So first we need to see what price is achieved by the end of the first quarter.
Now, if you wanted to expand a little bit more on how there's going to be deflation, but there's also going to be what you call hyperinflation in 2017. So we're going to see deflation in the stock market, but hyperinflation in other areas. Can you expand on this?
Well, that's kind of like what we discussed with relation to gold and the dollar and the stock market earlier. So if the stock market is collapsing or falling, so if you have a 20-30% drop, sudden drop in the stock market, that's deflationary. But in reaction to that, you're going to have gold going up. So that is inflationary. So the price of gold inflates versus the stock market deflates. So that's really, what we're going to see in this year. And then we're going to see, as the latter part of the year comes to unfold, gold again is going to have several moves to the upside with silver, and the markets are going to fall one more time again. So that's really how I see this playing out. I see them being because gold and silver versus the stock market are opposite trades this time, and so as the market deflates, gold and silver are going to inflate.
Now, what do you see happening with the dollar index in 2017?
Well, if in the video, if you want your viewers go to my website, you can watch the video that we did called the Trappist set, and in that video, we discussed how the U.S. dollar was supposed to have topped right around 103 and change. I think in the 15th of January, it hit a high of 103.53. Then I think the beginning of January went a little higher, but never closed ever above 103.53. And then as of the close on Friday the 13th, I think it closed around 101.19. So it's down about $2 already. But the U.S. dollar is supposed to have topped at the very end here of December 2016. And now the U.S. dollar is in a down cycle. So as the dollar goes down, gold will go up. Possible target for gold for the U.S. dollar near term, maybe in the 90 to 91 price range. So we'll see. But I do know that the dollar is now in a down cycle, and the euro is in an up cycle.
Now, moving back to precious metals, I'd like to discuss a little bit about the fundamentals behind gold and silver right now. In your latest video, you discussed the dollar to gold ratio, and I was wondering if you could talk or explain what this is. It showed actually that gold should be, according to the dollar gold ratio, should be nearly $9,000 and that silver should be nearly $1,000. Can you explain what the dollar to gold ratio is and why it is significant?
Well, it's rather fascinating that anybody can go to type in usdebtclock.org, and this website pops up, by the government, and it actually shows you the national debt, which is just under $20 trillion right now, giving each taxpayer something like over $800,000 in liabilities or debt. And then in the bottom right corner, it shows the price of gold and the price of silver. And if you run your mouse over that, what it will show you is a definition in the top window. And what it is, it's the M2, or the money supply, divided by the amount of gold mined per year, or if it's silver, the amount of silver mined per year. So, if silver is priced at, under $20 and they've got a price in the $1,000 range, just to hold some silver, I think would be incredibly important, because we all know from a mining perspective, I think there've been enough interviews done, and people who are in the mining sector know that the gold to silver ratio is roughly 9-to-1, say 10-to-1. So that makes sense. If you look at the debt clock, it's got gold priced at 9,000 and silver priced at, say, 1,000. So that puts a ratio again 9-to-1. So it makes sense, the number that they're using there. And then you look at the money supply, and through derivative contracts, all that's happened is they've been able to manipulate the price down to these silly numbers like $1,000 on gold, $1,100, $1,200 on gold, and $18, $17 on silver. But that's just through simple price manipulation. That's done through all these enormous derivative contracts. So when control is lost, don't be surprised if silly numbers are soon to be seen in the price of gold and silver. Whether it happens sooner rather than later, it doesn't matter. The bottom line is the money supply is exorbitant, and the price of the gold and silver are a limited quantity, and they're limited on this earth. You cannot print gold and silver physical. You just can't. So at some point, the price could be these what you're seeing there on that debt clock. Don't be surprised one day in the future you might see prices like that or even higher. So that's really what it is, and the debt clock actually shows you a number, which is I find truly fascinating.
In your opinion, what are the best ways that people can invest in gold and silver? Because I know you've talked about in your recent video about the difference between owning paper gold and silver, like gold and silver ETFs, and the physical metal. Can you discuss this?
Sure. If you've watched any of my videos or interviews I've done, that what has been my main concept. Everything I've ever talked about is very simple. Own physical gold and silver. And the trading, that people do, that's for fun, but you should never, but in terms of protecting yourself, your family, you have to own physical gold and silver because it's limited on this earth. And so if the price starts to jump to some of these larger numbers, the problem is the dealers that are selling gold and silver, they're going to shut their doors and they're going to wait for the price to stabilize. Once the price stabilizes, they'll open their doors and sell it to you, but you're going to be paying who knows what. And on top of that, just the spread to get it in your hand might be another double the price. So, if people are investing in gold and silver and they're buying things like GLD, which is paper gold, or SLV, paper silver, and they think they're actually buying silver, it's not in their hand, and so it's a presumption that it will one day be there. That's it, and it's like, what's it saying? one in hand is better than two in the bush. If you think about that. But basically, if you have it in your hands, it's yours. If you believe you have it, but you can't see it, then it's just paper, and that's all it is. And so one day, should there be a massive problem, you might just find out that you don't have any gold in your GLD, and you don't have any silver, and all you had was paper. And I believe this is one day where this is all headed. So extremely important at these low prices right now to be positioned, and the premium spreads are very small right now to own gold and silver. So there's an incredible difference between owning physical gold and silver versus something that's just made of paper.
All right. Well, Bo Polny, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you online?
I think we've talked about a lot of information right now. I just think it's such an important time. We're setting up for a very large move potentially in gold this year, and a lot of tremendous problems in the stock market and in the dollar. So I think this is a very important time to be paying attention to what's going on around you. If people are interested in more information, my website is gold2020forecast.com. Presently in there, what we were offering, for the traders specifically, if you're really excited about, making some positions here, going into this year, we've got our turn dates, we got them discounted. And I think there's just an incredible opportunity here for the near term, just, for this quarter even. So a lot of excitement, I think, is about to happen here, and I'm just excited for the changes finally, because I think we've been waiting a long time, and I think we're very close now.
All right. Once again, thank you so much for your insights today.
Thank you, Elijah, for calling. Nice to speak with you.
This video was brought to you in part by ReluctantPreppers.com. Click here to watch Reluctant Prepper's latest interview with G. Edward Griffin. Despite the mainstream media, educational establishment, entertainment industry, governments, global powers, and scientific researchers seeming to close ranks claiming a 97% consensus on human-caused global warming, glaring conflicts of interest indicate massive collusion, pointed at stripping away our individual liberties and our national sovereignty with the ultimate objective of regulating all human activity. If you haven't felt it was the time to wake up and stand up and speak up before now, you owe it to yourself and your family to hear the renowned researcher and author G. Edward Griffin's breaking report, fresh from the latest global warming hoax conference in Phoenix, in this exclusive interview on Reluctant Preppers.